Welcome to Wealth Well Done. Together, we'll cover a wide range of important topics surrounding money and the impact it has on our lives. From the sophisticated and highly valuable planning techniques of the ultra-wealthy to the commonly underutilized biblical teachings. Together, we'll work to improve our relationship with money and our effectiveness in stewarding it well. Here's your host, Eric Scovill.
Okay, welcome to the 43rd episode of the Wealth Well Done podcast, where we lean into the tactical, practical, and spiritual advice to help you do your wealth well done. Last couple of weeks, we've had Nathan Rickner on. Pastor Nathan has come on, and we have had absolutely wonderful conversations around the Holy Spirit and also around fasting. So if you were looking to be challenged and made uncomfortable at the beginning of the year, I'd encourage you to go back and listen to those. This week, we are getting back into the tactical side of wealth management here, and I am so blessed and excited for this conversation with a guy who's really you've become a brother of mine, Andrew. So Andrew Barlow with his Kingdom Resources, Harvest Investment Services, Envoy. You've got another number of companies and hats that you wear, and we're going to get into that. But anyways, thank you for joining us today.
Thanks for having me.
Yeah, absolutely. So I'm excited for this because, like I said, I feel like you have become a brother here, but there's still so much to your story that I don't know. So I'm looking forward to continuing to have this conversation with you. And you bring such and not a pun intended here, you bring such a wealth of knowledge to the investment space, and your focus is really around people with a kingdom mindset as well. And so thank you for the work that you do, but I want to dig in and maybe will you give us a little backstory, just a little bit who you are as a person and how you got into this world of high finance that you have found yourself in now?
Yeah, absolutely. I wanted to mention real quick, I love that you guys were diving into the topic of fasting. That's been such a absolute, such a powerful way in my faith walk to keep the main thing the main thing. Right. It's a great opportunity and way to push the flesh down and say, nope, you're not in charge here. Right. And just recenter, refocus on hearing God and what he wants you to do. So I'm so glad that you guys were diving into that. That's amazing. So Andrew Barlow, I'm here in our offices based in the Chicagoland area. I grew up here out in the western suburbs. Most people are familiar with the Wheaton College, that area. So I live there in Wheaton now with my family, my wife Kimberly, and our two daughters. And I grew up. I was a typical Midwest homeschool kid. My parents raised us in a very entrepreneurial way. So from a very early age, it was, hey, what are you passionate about? What do you love? What do you love to do? And how can we help you start a business in that area? And they had a thing with each of us kids that when we turned 13 years old, they would buy us something that would help us start a business in whatever area of passion we had. I would always like to fix people's computers and so when I had somebody at church ask me, can you design me a website? I'm like, absolutely, I can design you a website. I had never designed a website before. And so I'm like, Mom and Dad, it's time for my gift. And so they bought me Adobe Dreamweaver back then was the website tool. And so I figured out how to build a website and started a business in that area. So that launched for me a time running my own business. And I also teamed up with a friend of mine when I was about 16 years old, who was doing a tech startup. And we teamed up. I was working remotely back before remote work was a big thing. And I was helping him with a tech startup that he was doing throughout my high school years. That led to me moving out to Santa Barbara, California for about 8 years, and then Bend, Oregon a little bit, and running a tech startup business with a friend of mine. And so we over the course of about 15 years, we ran and we launched about 8 different brands. And it was just an amazing journey that God had me on of preparing and equipping me and a lot of trial and error and seeking the Lord on, hey, what do you want us to do? How do you want us to have impact through the work that you've called us to? And that's got to be the foundation of everything we do, right? Is how has God called us to have impact through what he's put in front of us.
Right.
And
Right.
so I did that for about 15, 16 years, exited that about 3 or 4 years ago. And eventually I met my wife out in California. We had our kiddos out there, but we decided after living in two of the most beautiful places in the country with Santa Barbara and Bend, Oregon, that we really felt that desire and craving to be back in the ice cold, frigid weather of Chicago, Illinois.
Out my window is a gorgeous snowstorm right now, and I
yeah,
love it.
it's coming down. It's coming down. I'm about an hour or so north of you, and but really the reality is that raising kids without family around is challenging, and so we wanted to get back here to be around family, be in community with them, and I was able to reconnect with another homeschool family, the father of another homeschool family that I grew up with. His name is Tim Newell, and he has been in this area of the stewardship of finances for many years. He just surpassed 4 decades, so he's been around the block a couple times here, and so I was able to team up with him, and God has just entrusted him and this firm with a lot of really exciting things going on to have kingdom impact through this area of financial stewardship. And so I joined the team here about 4 years ago, and it's been a wild, amazing ride of learning how to become a champion of biblical financial stewardship.
All right. That is wonderful.
That was a lot, I know. A little bit of a fire hose.
So our next podcast we're going to do too with Andrew, and the second one we're going to do is raising children inside wealth, and so that helps a lot for the next one. So make sure you tune in next week for that.
Love it.
All right. So with Tim and the experience that he has, and now these different businesses that you've created, what I want to do is I want to kind of take ourselves and put ourselves into the shoes of someone who they might be a successful business owner, or just it don't have to be a business owner by any means, but from the standpoint of a normal functioning person in society who has not been trained in the financial world, from the investment standpoint. Obviously, there's a whole lot more to finances than investments, but those who have not been trained in the investment standpoint, if they open their eyes enough, they see that what was made to look really simple and easy on a Robinhood commercial or something like that, like, oh, look, organic food, I should invest in organic food, now I made a ton of money. If they've opened their eyes beyond that to see just how difficult it is, and to start seeing, like, the industry is full of wolves. I say it a lot. The industry is full of wolves. You go look at any type of advertisement for an investment vehicle, the stuff that you need to know is nowhere to be found. The stuff that's going to help you understand why this is not a good fit for you is nowhere to be found. But there's all these things that make it look great, and we can make anything look like it is, as low risk as you want it to look like, and we can make it look as, we can highlight the guy who actually trained me. He always talked about it's sizzle. They'll show you all the sizzle over here, and don't worry about the steak over here. And so from that standpoint, what I want to do is I want to speak to the people who are tired of not getting investments. They're tired of the cookie cutter advice that they have been given that doesn't seem to be working. And they don't understand this because a lot of it is very confusing and intentionally confusing. And so I want to take ourselves into that mindset and speak to those people to bring value to them today. So if you're listening, I hope this is going to be helpful. We're going to try to talk about different types of investment vehicles, as well as how someone in Andrew's position would assess risk as well. Because with risk, there's different ways that you would describe risk in different conversations. And with risk, there needs to be if you could break it down as simple as to per unit of risk, we should achieve a certain unit of measurement of return. And so anyways, that's what we're going to go at today. Andrew, will you please start with the idea of, um, let's start broad and then we'll narrow it in. So we're going to start with
Yeah,
a total portfolio for someone here, and then we're going to start to narrow it down into the investment selections inside of that. So from a
absolutely.
portfolio construction standpoint, and to back this up here, so um, Andrew has three different firms that they work in, where they give financial advice um, to a wide range of people, but especially to wealthy individuals, that the Lord has entrusted with significant assets, and that are focused on being good stewards with those funds. So that they have the team and the expertise behind this. So we talk about, how do you go about creating a portfolio for someone who's maybe in their 50s, so they've got a little time horizon, they still have income coming in, and they're trying to see good growth, but they also, the political climate, the inflation, they have other
Yeah,
concerns as well. So how do you build a portfolio?
absolutely. I'll caveat into this because I think it's an important thing, and really, I know that it matters a lot to you, and it matters a lot to us, and probably many of the listeners as well. We operate as a firm from the absolute foundational principle that everything that we have has been entrusted to us by our Creator, and it belongs to Him, and we're called to be wise stewards of that. That includes stewardship of the investments and making wise decisions on what we invest money into. Uh, but we believe that stewardship, it needs to go across every single area of our life: time, talent, treasure, that whole concept. But we also believe that if it's true that thing that we put out there and say that all of this belongs to Him, that it also matters what we invest in, and it matters what the companies that we invest in support, manufacture, distribute, etc. And so we are a champion of the biblically responsible investing movement, where we say, okay, we're going to take a hard look at the companies that we are considering investing in before we take an investment position into them, to see if the things that they're doing are in alignment with our biblical worldview. And so we screen out for 8 different criteria, where we look at the things that those companies are doing, and we say, okay, is this something that we want to be aligned with or equally yoked with? And if they are doing anything that violates in those 8 different areas — abortion, pornography, human rights violations, all the way down the line — then we will screen them out and choose to not take an investment position in them. Beyond that, we then will sit with the client in the use case that you talked about, of a couple in their 40s or 50s that are looking to the future. We'll do the whole comprehensive financial planning process, just like you do, and say, okay, what is the time horizon that you have? And then we will choose a biblically responsible investing model that fits well for the season that they're in. Um, One of the challenges that you'll see in the industry, and there's a lot of back and forth on this, there's very vastly differing opinions when you get into the whole conversation about buy and hold versus more of an active approach to management. And statistically, it is challenging to outperform over the long term a buy and hold strategy, unless you are very good at what you do, or you're actively managing things in a very good way. And the challenge with us taking a hard line on biblically responsible investing and say we will not invest dollars into companies that are in violation of this is that uh, precludes us from investing in a lot of the typical. You can't just buy a basket of stocks. You can't just buy the S&P 500,
Right.
where over half the companies in the S&P would violate in some way. And so we take a very active approach to actually choosing the individual equity positions that we will invest in on behalf of our clients, to make sure that not only are they do they screen clean, but we'll also look at a lot of different indicators in building out that process. So often there will be some piece of equity exposure, but we'll also look at non-correlated assets. And we'll talk a little bit about that in a little bit here. But things like private equity, things like real estate, other options to be part of that well-rounded out portfolio that has good downside risk controls in place. That's very, very important, especially in the geopolitical climate that we're in. When there's still we believe there's still a pretty good chance that we could see a recession in the next 6 to 12 months.
What is a downside risk control?
Yeah, great question. It would be some sort of mechanism, tool, unique strategy that's implemented inside of a portfolio to limit downside. Because we are on the side of a firmly very active tactical manager. We are looking every single day at the positions that our clients are invested in. We're looking to see what has good momentum, what's moving in the right direction. But because we're watching all these different indicators, an example would be you're driving down the road and you see a yellow light. Well, you're going to make a decision there on what you do with the yellow light. You see a red light, okay, it's time to start to hit the brakes. And so we use indicators in a way that allow us to put downside risk controls in place. An example of that would be something like a unique strategy like a trailing stop, where we have something has good momentum, and so it's moving in the right direction. I don't know, with the mirrored camera. There we go.
Yeah, there you go.
And then it starts to pull back, and then we can have a mechanism put in place, a stop that would allow us to limit loss.
Yeah.
And so we'll use things like that. We'll use unique strategies that I don't want to get too nerdy into that side of it today, but unique strategies like structured notes, where there's built-in downside buffer or sometimes even full principal protection that allow us to limit that. Where if things continue to move in the right direction, awesome, we're going to participate in the upside. But if things turn around on us, and a year from now, Nvidia is down 60% because something crazy happened in Taiwan, we're not going to participate in that 60% downside. We're going to stop out at what we came in at. So that's just an example of downside risk controls. Often people will have. Yeah, go ahead.
Well, I was going to say, so then for if I'm creating a portfolio here, you're going to almost bucket that out a little bit, that you're going to have different types of exposures here to equity, structured notes, and other things. And so you're going to basically have different performance characteristics of each of these. So that way you're not trying to, I guess, one thing with this is, if the S&P, rips up 25%, inside a diversified portfolio here with downside protection, you might not participate in that full 25% gains. And it may be, depending on how things go, maybe you're able to do that better. But at the same time, the idea is to not participate in a 40% loss there either, and to have different buckets that are going to perform well in different types of environments there, and with higher interest rates, what impact that's going to have. And so okay, so you're building
everything
a portfolio.
runs in cycles.
Yeah.
Everything runs in cycles, and it's important to know where you're at in those cycles, and to know what could come, and to take appropriate. It's really back to that idea of wise stewardship.
So then, when you see, so you guys have active management here, you typically recommend that a client, like for a client who has seen you guys, well exceed the fees that you're charging for, higher level fee for higher level management. They've seen what you've created this alpha here, and the outsized returns. Would you recommend that they wind up having all of their portfolio in active management, or is that typically a piece of it?
It's a piece of it. It depends on the larger the portfolio and the overall strategy that we're implementing for them. There's a lot of other factors like liquidity and other things that really need to be factored into that. But obviously, another part of healthy portfolio construction is diversification. So we wouldn't ever recommend that somebody has 100% exposure to equities only. You need to have other tools in place. Sometimes we say, okay, well, if you really are going very heavily growth oriented, you're going to have a higher than normal, or higher than somebody who's taking a very conservative approach. But there are also still natural downside risk controls in place, even in our growth oriented strategies, because as an active tactical manager, we have a higher than normal allocation to cash so that we can use those cash for the trades that we do day in and day out. But with that, we're actively every day taking gains off the table and then limiting losses through some of those trading strategies.
Okay. And
so
then that
just
go ahead.
Yeah, to round out that the answer there, as part of that portfolio construction, we would say, okay, does it make sense for this investor, if they are accredited and meet all the criteria, to have some exposure to private equity? And that can take a variety of different forms. But what we've done is we'll talk later about the His Kingdom Resources Fund, but then there's also other faith-based private equity options where you're partnering with people who have bigger kingdom impact in mind, but in a way that's not concessionary, right? We believe we're called to get a good return so that we can continue to have more kingdom impact with what's been entrusted to us.
Okay, so let's say one more thing inside more of the traditional public market, and then we're going to switch to private equity for risk. So, lots of talk out there about how overvalued the stock market is today. Mm-hmm. How do you guys use any, PE ratios or standard deviation measurements to control the risk inside your portfolios?
Yeah, we're looking every day at the positions that we're holding. Often one of our portfolio or one of our models will have it will have core holdings, and then we have our actively traded percent. About 50% of the account will be usually in our core holdings, and those are positions that we're looking at every day that have momentum. They're moving in the right direction. There's catalysts for them to continue moving in the right direction. And so that's going to be a piece of the portfolio. The other piece of it will be as we're buying and moving money in and out of the market every day. We trade in a block account, and then it gets allocated out to all the accounts that we're managing. When we look at the equities, I talked about screening as the first step that we do. The second step will be looking at a variety of different indicators. Do they have earnings reports coming up? Are there other things that could contribute positively or negatively to the movement of this position? And if we believe something has a catalyst to move in the right direction, it's not a great analogy because of the things that we screen out, but we're kind of betting on the fastest horses in the race. Yeah. And when they start to slow down, we look to exit them.
But we're not advocating horse betting.
Yeah, exactly.
All right. No, this is great. And so just a note there. So as a financial advisor myself, I am needing to honestly take a deeper look at the portfolios that you guys use, because I can, and whether this is me or, a listener here with, directly through Andrew and his team or through their own financial advisor, we can invest in the portfolios that they manage. And so that's something that we're going to be looking at for our clients as well. I know we've talked before about the performance. The performance was quite impressive, and it's something that I need to take a better look at for our clients as well, because I think that you guys would be doing that at a very high level. So I want to
one note on that real quick. Yeah. One of the challenges historically with biblically responsible investing, and this idea of looking at what's going on in the companies that you invest in, it's been very challenging historically to get good performance from models like that, other models like that, because if you look at the movement of the S&P in 2023. Much of that was driven, the majority of that was driven by the top 10 companies in the S&P. And if you weren't invested in those top 10 companies in the S&P, you saw fractions of the positive movement of the S&P. And so the challenge is 8 out of the 10 top companies in the S&P are uninvestable to us from a biblically responsible perspective because of the things that they're supporting or manufacturing and all of that. So we have to find other ways and other places to get our returns from. So one of the testimonies of that, we set out it with the goal of investing in having a portfolio that is 100% pure, as close to 100% as you can get in this dynamic environment where people are doing things every single day, but still deliver out performance. And over the long term, that's been the case, with all the appropriate disclosures in place about past performance and all of that. But the active approach, we believe, has been a great way to have downside risk controls and still deliver performance in a completely biblically responsible portfolio.
Yeah, and that's great. And to anyone who had a strategically allocated portfolio last year that didn't do as well as the S&P, I'm going to give your advisor, whoever did that, I'm going to give them a little credit and slack there, because of those top 10 stocks, you look at a lot of the ways that you would decide if they're a good investment. They didn't look like a good investment, yet they just continued to run up higher and higher. So
that's right.
Okay. Yeah. The rules are continuing to change in that realm of those investment decisions. So let's switch gears into something exterior to the stock market. And so we talk about non-correlated assets here, and what a non-correlated asset is basically something that if the stock market is going to take a big hit because interest rates are going to go up, and so stock market goes down, it just uniformly across the board, it basically goes down. The private equity space is not necessarily tied to that. There are some minor effects on that, but it's not near as directly tied to it. Nor is it what they call mark to market. So you don't see a new valuation of the private equity stock every millisecond of the day. And so that certainly helps slow down the panic that happens inside the stock market here. But will you talk a little bit about the listeners that have heard about private equity before? We've talked about that. So let's dig into His Kingdom Resources, what the fund is that you guys have, as well as how would you describe that risk to someone. I've been investing with you. You've been actively managing my account, but I have all these stocks that if I wanted to sell them today, I could call you up and you could press some buttons and sell the stock, and I'd see my money in a week in my account. Help me understand the risks that we're talking about here for these small companies compared to these conglomerates, and then what His Kingdom Resources Fund actually is.
Yeah, absolutely. So jumping back for a second to the concept of biblically responsible investing, the first level of that we try to put in place on the publicly traded side is how are you avoiding investing in the bad, and the companies that are doing things that are directly in opposition to the things that we believe. It's very important. But we believe that we're called to more. We're called to more than just tiptoeing around trying to avoid stepping on, investing landmines. We believe that we're called to have true kingdom impact.
Play offense.
And there are some, exactly, play offense. We believe that we're called to, there are some really good examples of kingdom businesses out there. Think about the Hobby Lobbies and the Chick-fil-A's of the world that are doing incredible work. And there are billions of dollars flowing into the kingdom, flowing into kingdom impact initiatives through the work that God has called those companies to, and the profits that come out of those companies. And that's just two of them. There's a lot of amazing ones. And so when we look at how can we identify who are the next Hobby Lobbies and Chick-fil-A's of the world, who are the people, the Christ followers that God has given unique ideas, the Bible talks about knowledge of witty inventions. Who are those people? What are the ideas that have been given to them that are going to advance the kingdom? And they're going to advance the kingdom through financial returns, but they're also going to advance the kingdom through the actual technology and the things that God has given them to create. And how can we identify them and come alongside of them with necessary resources? Sometimes that's capital, sometimes that's strategic. But how can we come alongside of them and actually amplify and enhance the kingdom impact that God has called them to, as people who are called to that area? And so the reality, the answer is that needs to be done through a private equity type of vehicle. The challenge is that, people have often, most people's exposure to private equity is, hey, my brother-in-law started a, trucking business and he needed 25 grand. So he did a little friends and family round, and that was 15 years ago. And I don't know if I'm ever going to get my 25 grand back. And it's just kind of this big illiquid asset that's on my balance sheet somewhere, that I just don't even really think about anymore. And maybe I've just kind of given up on it. So there's a lot of challenges around traditional private equity, where you're like, hey, I met these people who are doing a fund, and I like them. I like what they're saying that they're going to target, but I don't necessarily know what I'm going to be getting into. It's kind of a blind pool, right? I'm committing a certain amount of money, and I don't know what kind of companies they're going to invest in, or if I like those companies, and so as we've helped our clients invest in a lot of private equity over the last 40 years, we've learned a lot of things that we didn't love about the traditional private equity space. And so when we said, hey, how are we going to have kingdom impact through investing? How are we going to embrace companies that are doing things the right way? We said, number one, we need to have a private equity fund or a VC fund or that model. And number two, we're going to do it in a little bit of a different way. We're going to do it in a way where it's not a blind pool. Whereas money comes into the fund, it gets deployed out into the portfolio companies, and that has been seeded. So you know what you're getting into. And so for us with the His Kingdom Resources Fund, we said, if this is going to be designed in the right way with the right structure to have the maximum impact, number one, every single company that we invest in has to be Christian owned and operated. That's a non-negotiable for us. We're not saying that everybody down the line, every single staff member has to be a Christ follower, but the foundation has to be in the right place.
Yep.
Number two and number three for us, there has to be some form of kingdom impact built into what they're doing as a company. Sometimes that looks like direct kingdom impact, like technology being created to actively fight human trafficking, or technology being created to accelerate Bible translation. Other times that's more indirect kingdom impact, or some would call it common good, where it's technology that's being created that's making our lives here on earth better, health and wellness and other things like that. But the fourth one is, because of what God's called us to in being wise stewards, like the parable of the talents, these are not concessionary investments. They have to have a clear path to a high return multiple. And then the other thing for us as
and
a
that
fund
high return
is
multiple, we're saying, is a baseline of
we
10x.
we target at least 10x or better. We have some of the portfolio we've deployed capital in our current fund to 8 different companies so far. We're circling around the last 3 or 4 that we're going to be deploying capital to here. But they all of them are clearly on that path to at least 10x. Some of them are blowing that out of the water because of the really amazing, unique inventions and ideas that God's given them. And then the last thing is that we are only taking positions in this fund in companies that have the potential for a shorter term liquidity event. We're a 5-year fund, and we're looking to be able to have opportunities to exit that before then. The idea for that is that you don't have a 20-year hold on something. You want to use that capital and that grown capital to have kingdom impact, to give to the objectives that you're passionate about. And so we're looking to say, our entire fund is, how can we enable extravagant kingdom giving? And so we're trying to set an example for that as the sponsor of the fund, where on the management fees for the fund, it's a typical 2 and 20 fund. We don't need to get into all those details right now, but we're at least tithing. To date, we've given double that on the management fees. And then on the performance allocation, we're giving at least half of that to Bible translation, Bible distribution, kind of holistically addressing the pro-life cause, and then putting an end to human and sex trafficking. Our goal is to cover our costs and give the rest of what would come to us as the sponsor back into the kingdom, because that's the whole reason for this. So having a solid, non-correlated asset class, you just talked about that a little bit, that's a little bit different than the other holdings in your portfolio, but has the potential for big returns that can help you be an even bigger giver, is why we're doing this.
I want to stay sharp and on point here, but we could get lost for the next 30 minutes just talking about how great it is what you guys do. For listeners out there, just want you to understand when you go, so at these family office conferences that we go to, the more family offices that we interact with, this is what they're looking for. They are looking for making private equity investments. They don't do a lot in the public markets. They do some, but most of what they're trying to do are try to make outsized gains. And so it has to be inside the certain risk models. They need to make sure they have other liquidity and money aside for their grocery bills. They don't put it all into this. So it's part of assessing risk is making sure that you have the portfolio allocation correctly, meaning that the right size of your portfolio invested into these. We often talk about the barbell strategy where you've got a big bulk of your portfolio. Traditional barbell would say in bonds or CDs, and the other parts in stocks. We go more toward the idea of real estate and royalty companies as a large portion of your portfolio, and then the other side we're looking for these home run swings with private equity. But certainly as you're trying to figure out how do you create larger wealth, wealth isn't typically created in the traditional way of investing in the stock market. Wealth is maintained there, or it could be grown over a 20, 30-year period, no doubt. Absolutely can be. But the way you see kind of outsized gains is typically in the private equity space. These funds, these family offices will spend boatloads of money trying to put together their portfolios to do exactly what you guys are doing with Hixium Resources. And so it's just a matter of finding the people who you trust, find the people who've got a track record, obviously 40 years of successful investment experience, and that says a ton about your team there. So I want to emphasize that the idea of including private equity into your portfolio, you certainly need to be an accredited investor, and I would say beyond that as well. You shouldn't just be at $1 million net worth. Getting into private equity spaces is you're pushing the limits there. Obviously, but as the net worth grows beyond that, that's when you should start considering this as an option. Of course, talk to your financial team and get their advice there, because nothing we say here is construed as financial advice. Okay, so last thing here before we go, risk inside private equity here. So the idea of investing in one company versus a fund, there's a certainly reduced risk, because if you've got 12 companies in there that you're investing in, that broadens my chances. But the idea of, so here in Peoria, this is used to be Caterpillar country. We still kind of consider ourselves Caterpillar country. But if Caterpillar is a $55 billion company, and I want to invest in a company that has that's more like let's say it's got $5 million of sales right now. To try to understand the difference in risk of a company that's got $5 million in sales versus Caterpillar, pretty hard to even fathom what that is. So the risk is definitely different. There's a much greater chance that you could lose your money. There's obviously a much greater chance that you could have a high return in the $5 million company than on Caterpillar. How do you describe the risk to someone there?
Yeah, great question. The traditional risk to consider in private equity, the biggest risk, in my opinion, is typically time. Right? How long is your money going to be tied up? And we talked a little bit about the liquidity already. The other risk of whether it's market risk or business risk, what's the risk that this business I'm investing in is going to fail, and what are the potential risks to that? What are the we'll sit down with companies and do a full SWOT analysis and say, okay, what could go wrong here? What are the threats? What are the opportunities? What are the risks? And so when we're looking at a business to invest in, we're digging into that. But at a higher level, when you're talking about the diversification across a fund, that's why we chose. We didn't just choose 12 companies to invest in because it's a really spiritual number and 12 disciples and all that. We actually believe that there's wise methods there when it comes to diversification. not just in time, because some of the companies we're investing in have the potential for an earlier stage liquidity event. We have one that's likely going to go public in 2025. So there will start to be opportunities for liquidity much sooner.
Yep.
And that enables us to get the upfront capital off the table and all of that. And then you're kind of you have a bunch of other liquidity events lined up that you can do more and more giving from. So when you're looking at a business, we're a little bit sector agnostic. We're not saying, hey, we're just going to invest in tech, or we're just going to invest in energy or whatever. We're looking at because of how narrow our other investment criteria is, we're looking at companies that are at different stages. Some of them that we invested early on when it was an amazing team and an algorithm. And now here a year later, they're post-revenue. They're making money. It's been able to de-risk over time. So you're looking at different types of risk. That's one of the big parts that we dig into in our due diligence process is what could go wrong here. Could somebody beat them to market? Or is their portfolio of intellectual property properly protected? And so those are a couple of things that we look at when you look at the risks of coming in early to a company. Hey, does this company have a good foundation in place? Who's on the board? Who's the executive team? We usually require that we take a board seat when we invest so that we can represent our investors, but then also protect the kingdom impact that's been built into that company. So it's a little bit of what we do to look to defray or diversify risk is investing in 12 different companies. So in case you had a Judas in the ranks or something like that, not everything's at risk. But then we go really, really deep, and then we do ongoing check-ins, and we'll bring the CEOs of our portfolio companies together to be in community with one another and to help each other through some of the challenging times. And so those are a couple ways that we address some of the typical risks of private equity.
Awesome. All right, we're gonna wrap this one up here, but I truly appreciate your time and your wisdom. If someone wants to get a hold of you to talk about any of this stuff, how do they get into contact with you?
Yeah, Andrew at hiskingdomresources.com would be the best way to reach out to me if you want to learn more. We're towards the end of Fund 1, but there's as we've put our flag in the sand and said, we are going to only invest in companies in this very narrow criteria. Has to have kingdom impact, has to be Christian-owned, has to have the potential for a high return multiple. We had a lot of people ask us early on, are you going to have trouble finding deals, finding companies that meet that criteria? And the testimony is that hasn't been a problem. It's been really awesome to see what God's doing through Christ followers all over the world.
Yeah. And
giving them amazing ideas and people whose hearts are for Him and whose hearts are tuned into Him and the Spirit. And it's just an absolute thrill. We're doing this entire thing to accelerate kingdom impact, and we're already seeing that. It's one of the things that I love is some of the first returns that we're seeing come out of the His Kingdom Resources Fund are kingdom returns from the giving that we've already been able to do. We're already seeing people be saved. We're already seeing the word. We did a Bible distribution project to the Sudanese refugees in Uganda. And we're already seeing people come to the Lord as a result of what's happening through this. And we're really excited about that. But all of this is just listen and obey, right? That's got to be our whole life. God, what do you want me to do? And I'm going to say yes and go do it. So
awesome.
Yeah, right. I'd love to talk more if anybody wants to talk.
Andrew Barlow, I truly appreciate you. Thanks for the wisdom here. And we are going to be back next week, which for us is going to be in a couple minutes, talking about raising children inside wealth. So hope you'll tune in again. Thanks for listening.
Thanks, everybody.
Thank you again for listening to Wealth Well Done. Be sure to subscribe to the show on your favorite podcast player, and together we'll continue to improve our relationship with money and our effectiveness in stewarding it well.